Hello, I'm Vadani Ariyam. In this video, I'm going to talk about budget. What is a budget variance analysis? When we are setting at the budget, we have to make sure there are no variances, serious variances. That's what I'm going to talk about. A budget done for a business to monitor the profitability of the company on an annual basis. So at the start of the financial year, every financial year, a new budget is done, and that's compared with the actuals for that year in the financial statements with the financial statements. A financial statement is a profit and loss account and a balance sheet. And where you get the figures for revenues and expenditure. If the figure is more than the actual figure is more than the budgeted figure, it's a negative variance. If the actual figure is less than the budgeted figure, it is a positive variance. Then we need to adjust the budget accordingly and revise the budget, review the budget accordingly so that we can have a realistic budget. If you are starting a new company, setting an annual budget and a cash flow is crucial, at least if you want to survive for 1 year. How do you analyze the variance in the budget? Variance equals budget spending minus actual spending. If the difference is high, that shows incorrect setting of the budget. The budget should set at the beginning of the year based on the final accounts of the previous year. The variance will be mostly in expenses that are easily controllable, maybe due to emergency expenses that shouldn't have been there because it should have been expected and included in the budget for emergencies, increase in the expenses. If not, there will be an adverse impact on the profits. Controllable variances. The variances in expenses controllable by transferring the positive variance to the negative variance, so that the negative variance will get eliminated and the budget will balance. Nevertheless, that depends on the actual need of that particular expense. Or sometimes you can reduce if there is a negative variance in an expense, you can reduce the amount allowed. You can increase the amount allowed in the budget or reduce the expense in the long run, in the short run or long run. But that depends on the necessity of that particular expense. Let me show you an example. Say your phone bill was 3,000 and your electric bill was 4,500. Your actual phone bill was 3,000 and budgeted figure is 3,500, and same as the electric bill was 4,500 you have spent, but the budgeted for 4,000. So there is a difference of 500 in both, plus and minus differences. If you transfer the positive difference to the electric bill, so that is the elimination of the minus figure. So then the budget will balance. You can do like that. Sometimes the finance staff, when they set the budget, they do not include expected increases in some expenses. For example, we are leasing a place to run your business. The landlord, the property owner will increase the rent. You are aware of it, but you forget to include that in the budget. So definitely there will be a negative figure in the rent expense, These are all uncontrollable expenses. Therefore, the difference caused this way is due to new line, but not because of the improper management. How do you deal with this in the future? So you have to be careful with all this when you are setting the budget, when you are comparing with the actual expenses, you have to be careful. And how will you deal? Then the budget compared with the actual revenue and the expenditure, and with the necessary adjustments made in the budget, in the balancing. The budget will pass on to the managing directors to make the decisions. They need the financial decisions for the future of the company. In any business, small differences occur that will be ignored. That will not have a bad effect. But if there is a significant difference, the responsibility of the management to find out the reason, the managing directors will have to find out the reasons and rectify that in the future budget setups. Then control the spending of so the variance will come to zero. You have to control if a expense is showing negative figure all the time, you have to make sure you control that expense. Then another point, in large company there will be several budgets for several departments, so all the budgets will be amalgamated into one when you are making the final decisions, financial decisions of the business. These are all about the budgeting, not setting up the budget variances, how to analyze the variance, how to rectify the differences, how to make sure you are not doing the same thing for the following year as well. I hope you understood these tips in analyzing the budget variances. If you like this video, please share it as well. Thank you for watching my video. Thank you. See you in another one.